Welcome to Weekly Market Research from Fullerton Markets. Let's dive into the latest market trends and insights. Dow Jones. U.S. stocks slipped Friday after a weaker-than-expected August jobs report raised concerns about a slowing economy, even as it strengthened expectations for a Federal Reserve rate cut this month. The S&P 500 fell 0.32% to 6,481. The Dow dropped 220 points, or 0.48% to 45,400. And the Nasdaq inched down 0.03% to 21,700. The economy added just 22,000 jobs versus forecasts of 75,000, while unemployment ticked up to 4.3%. Traders now see at least a quarter-point cut, with some betting on a half-point. Despite Friday's dip, the S&P and Nasdaq posted weekly gains, while the Dow closed lower. U30 USD on daily chart. After breaking through the strong resistance 2 weeks ago, price has revisited 45,000, which now acting as support. The index appears to be waiting for momentum, but it's clear that Dow Jones has entered a new zone and is positioning for another all-time high. Gold. Goldman Sachs projects that gold could soar to $4,000 per ounce by mid-2026 if Donald Trump continues to threaten the independence of the Federal Reserve. The bank argues that weaker Fed independence would drive higher inflation, hurt stocks and bonds, and weaken the dollar's reserve status, prompting investors to seek safety in gold. J.P. Morgan notes that markets are already reacting, with gold futures rising nearly 5% after Trump nominated Stephen Moran to the Fed on August 7, and another 5.8% after he threatened to fire Fed Governor Lisa Cook on August 22, showing investors are increasingly betting on a Fed inflation trade. XAU USD on H4 chart last week. Price continued pushing into new all-time high territory, driven largely by signs of USD weakness. We expect gold to retrace after reaching the 200% Fibonacci level near 3,600, with a temporary target around 3,550. USD JPY. President Donald Trump has signed an executive order to implement a trade deal with Japan that imposes a 15% baseline tariff on most Japanese goods, including autos, while securing Tokyo's pledge to invest $550 billion in U.S.-selected projects and ramp up purchases of American farm products, aircraft, and defense equipment. The agreement, reached in July, includes Japan buying 100 Boeing planes and significantly increasing imports of U.S. rice and crops. The tariffs, retroactive to August 7, 2025, threaten to hit Japan's auto sector hard. Toyota alone warned of a $10 billion blow, while also weighing on U.S. automakers like Ford and GM. The deal comes as Japanese Prime Minister Shigeru Ishiba faces mounting political pressure at home, with his party blaming recent election losses on weak economic measures and scandals, fueling speculation that Ishiba may soon be forced out of leadership. USD JPY on H4 charts steadily. This pair has been forming a mild bullish trend within last month's consolidation. Around 147.00 looks like an ideal entry point, with partial profit taking anticipated near 149.00. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets.